So let's fast forward a little bit. To recap, we talked about Apple in the 70s disrupting the PC industry, being born at a great time. Yahoo being born at a great time as the tech bubble was just starting, search was just becoming online, the internet was just becoming adopted. LinkedIn being born at a terrible time in 2003, where the venture capital industry was dried up almost completely. But again, in the wave of the internet. Let's fast forward to 2009, another recession, this time the great financial crisis. The internet wave is continuing, but wow, another horrible market. So briefly, I'll touch on, again, we said this earlier, macro doesn't matter. In fact, there's a lot more data of fortunes being made and successful companies being founded in down markets. And here, this company that was founded in 2009, it rings true again. We'll see that right now. So it's 2009, and three founders claw their way into the renowned accelerator Y Combinator, started by Paul Graham. Incredible investment accelerator. We'll talk about them later. Absolutely. That episode is going to be great. But they got into Y Combinator, which has a lower acceptance rate than Harvard, not because of their idea for a bed and breakfast platform on the internet where people can offer their couches for people to sleep on, the original concept for a company, Airbnb, who, now you may guess, we're talking about now, but for their scrappiness to fund the company by selling cereal branded with Barack Obama and John McCain. Yes, for those who don't know, Airbnb was originally funded by the founders by selling cereal they designed themselves called Obama O's and Captain McCain's during the 2008 election. So, if you're feeling a little bit of shock that Airbnb exists today because the founders were able to support the business by selling custom cereal, I'd say that's warranted. But, founders have to be scrappy. They have to figure it out. And these founders of Airbnb are the definition of scrappy. And so, certainly they could be born just inherently with that drive and with that desire for success and that scrappiness. But what really fueled them to push to make Airbnb successful was they were fueled by their experience they had themselves when they allowed someone to pay them to spend a weekend in their apartment after all the hotels in the city of San Francisco were booked for a huge conference. They had a great time with their guests and they got paid for it. So it's a win-win. And they knew there would be more people like them who wanted a little extra income, wanted to have interesting experiences, loved to meet new people. But they knew, and what many people thought at the time, that there were far more people who couldn't imagine letting a stranger sleep on your couch or sleep in your guest bedroom for a night. So fundraising would certainly be a challenge. Especially if you're a young 20-something, Airbnb might sound cool to you. But if you're trying to raise money from older 40 or 50-somethings, that does not seem like an experience they'd want to have. So anyway, there are many stories about how, in hindsight, the Airbnb founders are the perfect founders. And we'll get into that today. But back in 2009, they were unproven. They were a team of three, one software engineer, and two designers who went to design school. And neither of them had any experience running a business or building a business. They were certainly unproven. And they only had a measly marketplace doing $5,000 a week in revenue, not profit, revenue, with only about 2,000 listings on their site. So not really checking any of the boxes, really, as LinkedIn did at the time when Sequoia invested, of being already showing a lot of traction, had a great founder. They check those boxes that make an investment a lot easier. So how did Sequoia get the conviction to invest? Well, again, we'll bring up some quotes and some principles of current and former Sequoia partners that talk about the DNA of Sequoia that led them to have the conviction to invest in Airbnb. So first, we'll bring in a quote from former CEO and founder of Sequoia, Don Valentine, who talks about how the founders Sequoia works with must have clear and visionary storytelling abilities. He says, quote, "It's about the building of the idea, the size of the market, the degree of technical risk to get this product finished, who's going to care, and explaining that in a very simple way. We can tell that the person who can do that, explain in a very simple way, is somebody we want to be in business with." He later said the only competitive advantage that startups have is focus, speed, and stealth. If you're all over the place, you're not going to be able to execute on those things. So these founders certainly had a vision. I mean, they lived it themselves. They lived the product themselves. They had someone stay at their apartment. They had a great experience. The guests had a great experience. They knew others would enjoy this too. But how did they know for sure that others would enjoy it? Because it's great to be like, we experienced it. We had a great time. But how do you know that millions of other people would have a similar experience and love the product just as you did? Well, because they were customer obsessed. And another principle from Jess Lee, current Sequoia partner, she says, quote, "I think the best founders are customer obsessed. They talk to their customers all the time, and they're good at picking who they serve right now. And yeah, sure, maybe one day we'll serve everyone, but right now, this is who we're focused on, and we have to get this group so delighted and so happy that they tell their friends. And then the base expands little by little." So as I said, the Airbnb founders were completely customer obsessed. They knew most of their users lived in New York, and even though they had a minuscule budget to work with, the classic ramen noodle dinner budget, they spent a large chunk of that for flights to New York so that they could go talk to their customers in person and, ask them what they like about the product, what could be better about the product, just anything they could possibly think of to serve these customers. And there was only a few. I'm not sure exactly how many they met, but the way they talk about it makes it seem like less than a dozen hosts and guests they met with. So obviously this customer acquisition tactic won't scale. You can't, as a founder, go travel to every city in the world where your users are and ask them what they'd like to make better about the product. I mean, that is not going to scale. That is going to take way too much time and be way too expensive. But they knew that if they could just make a few customers absolutely fall in love with the product, word of mouth marketing would do its trick and the company would spread, much like we saw with LinkedIn. But there's kind of a second piece to this that, not only will that customer, really appreciate you taking the time to hear them out and make the product better. I mean, they met with a customer who said, they made a suggestion about how to make the site better. And he said a few weeks later, he went to Airbnb again and they implemented that exact suggestion he had. And he thought that was the coolest thing ever. I mean, here are the founders of a company doing exactly what you asked them to do. So the Airbnb founders, customer obsessed. And so what does customer obsession lead to? Well, it leads to a strong community. And so Jess Lee, again, who we've talked about many times, she has a lot of great adages that she's codified. I really like what she has to say. She says, quote, "I think the reason community's so relevant for business is that it's the ultimate growth engine. You're always worried about your CAC, customer acquisition cost, how expensive it is to run an enterprise sales team, and how difficult it is to acquire paid customers on Facebook or Instagram. And if you have a community, as in a group of users who love your product so much that they're willing to talk to their peers about it, that is free word of mouth marketing. That is zero CAC. And so I think the best companies in both consumer and enterprise know that and really cultivate that obsessed, loyal group of community members. And those customers are loyal to the brand. They give you feedback when they don't like what you're doing, They're your ear to the ground. They're your greatest advocates. It's really, I think, a secret weapon. So there's kind of like this trajectory that happens. If you're truly customer obsessed and like the Airbnb founders, you meet with your customers, you talk to them, you're really engaging. Eventually, the community will develop because those customers will love your product and they'll think it's so cool that you went and talked to them, that you implemented their suggestions. They're going to tell their friends about it. And again, people who use your product, their friends will typically use your product as well, or their network, their coworkers, whoever it may be, whoever they're associated with, they will tell about your product. Those people probably have similar interests from one another, so they will use your product. And word of mouth marketing is the best possible marketing. And by being customer obsessed and by building a community, you can develop word of mouth marketing and you'll be off to the races. So now the Airbnb team, having experienced it firsthand, being the first customers and being obsessed with their customers, willing to go across the country to meet with them on their shoestring budget, they were able to create and cultivate a community that loved their product, told their friends about it, so they could now begin to paint this beautiful and clear picture of what the world of Airbnb could become, what the future could be, what this vision is, which is great. But back in 2009, they still only had $5,000 a week in revenue and only 2,000 listings. But another but, Sequoia has a thesis. Like we said above, maybe Airbnb didn't check the great founder and great product traction boxes yet, but they checked the boxes of visionary founders, customer obsessed founders, and being able to build and cultivate a community, which is so valuable to have your product grow, especially a product that relies on a network like a marketplace where there needs to be buyers, there needs to be sellers, there needs to constantly be more users coming to the product. The Airbnb team was doing all the things they could to make sure that was happening. And so before I conclude here, I also want to touch on their website in 2009 looked great for 2009. I mean, if you're unfamiliar, there's this website, I think it's called the Wayback Archive. I always search Wayback Machine. If you search that in your search browser, it's basically a website that shows you websites from a long time ago. So you can use that. You can search Airbnb and go to Airbnb in 2009, or you can go to Instagram in 2011 or Facebook in 2005. Like, you can look at all these old websites. It's a really cool product. You should check it out if you're interested at all. But I say that because, if you're near your computer on your phone, it might be hard on your phone. If you're near your computer, you can search Airbnb and you can see what that website looked like in 2009 at the time Sequoia invested. Because again, it's all about putting yourself in the shoes of the investors to understand why they made the investment so you can learn from that. And so the website in 2009 looked great. I mean, I'll just try to describe it a little bit. It gave you a big search box that just prompted you by saying, where are you going? You can type in the city, type in your check-in dates, your checkout dates, how many guests, and hit search, and then find many listings for those desired dates and that desired cities. If you don't really know where you want to go, but you want to take a trip, they have like a revolving images of featured cities and apartments to rent and rooms to stay in at various cities. They also have at the bottom of the screen what I'd suspect are their most popular destination cities. They have Washington, D.C., Paris, San Francisco. What's unique is they have a picture of those cities, but they also have, for example, it says Washington, D.C. from $10 a night, or Paris, France from $20 a night. I'm just showing that it's drastically cheaper to stay in an Airbnb than to go book a hotel. There's a lot of value creation there, and it's obvious as soon as you go on the website. I love that website. I'm sure it helped them be very successful in the early stages. But I don't know if this website was a reason to invest or not. I mean, the fact that they were able to build this great of a website on such small of a budget, I think is an incredible sign. And me as an investor, I would certainly gain more conviction from that. But I don't know if the Sequoia team thought that or not. But going back to what we described earlier as the principles, the Airbnb certainly were visionary founders. They could paint that incredibly clear picture. They knew what their customers wanted. They knew from living it themselves. They knew from speaking with their customers. They built that community, and that community was growing stronger and stronger with more and more power users, super hosts. So they checked those boxes, and they checked them to a really strong degree. Airbnb is famous for being scrappy, visionary, and customer obsessed. I mean, they really check those boxes. So kind of a different reason why Sequoia invested. So they invested in Airbnb in what would eventually be their largest return ever from an absolute dollar perspective, which is incredible because such a unique investment that was non-obvious, very non-obvious at the time. And so they led Airbnb's seed round, first institutional investors after Y Combinator held them in their accelerator. And Sequoia invested slightly under $600,000 for 24% of the company. 24% of Airbnb, now a 80-some billion market cap company, for less than $600,000 just 13 years ago, or 14 years ago, excuse me. I mean, that's the beauty of venture capital. That's crazy that you can do that if you have this type of conviction, if you're so non-obvious and right, you really get rewarded for it in an incredible way in venture capital. And rewarded they did. After investing in basically every round, I mean, Airbnb had many private rounds. They were a private company for a very long time. So Sequoia, to maintain their ownership percentage, put in a total of $260 million for 16.5% of the company at the time of the IPO. So anyway, Sequoia purchased 24% of Airbnb for slightly less than $600,000 in 2009. And then ultimately, when Airbnb went public in 2020, Sequoia had invested around $260 million for now a 16.5% stake in the company. And they did not sell any shares in the IPO. Again, Sequoia typically trusts their companies for the long term, which after a nice 100 plus pop in the market, 2020, great times, they had a massive stake in Airbnb worth around $12 billion. $12 billion. 12 0 0 0 0 0 0 0 0 0. I mean, it's a lot of zeros. $12 billion from this one investment that started with $600,000 11 years ago. Unbelievable. One of the best, if not the best, returns in venture capital history. So next time, if you're an early stage or angel investor, you meet with a founder with a minuscule amount of revenue, very little traction on their marketplace, make sure you just ask them a few more questions about their vision, about their customers, about the strength of the community in their company, in their user base, before writing them off, because they could be the next Airbnb, apparently. And founders, perfect your story, be customer obsessed, try to build that community, and create that vision that is so compelling that the Airbnb founders were able to create, so that you can go into that meeting with your measly marketplace and sell Sequoia, one of the best VC firms ever, on that vision. I mean, they said themselves, they believe in visions. If you're a founder who can really tell that vision and really get them to believe with you, be irrationally optimistic about what this company could be, because you know your customers, because you know your product, because you can see what your company looks like in 10 years, and you can tell that story beautifully, that will give you a lot better of a chance to raise money if you don't check those traditional boxes of great traction on your product and history of as a successful founder. So perfect that story, and investors listen to that story.